On behalf of Elara Capital, I welcome you to the Q4FY22 result conference call of Minda Corporation. Today, from the management, we have Mr. Akash Minda as Executive Director of Finance and Strategy. We have Mr. Ashok Minda, Chairman and Group CEO. Mr. Neeraj Mahajan, Group Marketing Officer. Mr. Vinod Raheja, Group CFO. Mr. Anshul Saxena, Group Head Strategy and M&A. I'd like to hand over the call to Mr. Akash Minda for his opening remarks. Over to you, Akash.
Good afternoon, good evening, Jay. Thank you so much to Elara Capital for hosting us our quarterly and yearly presentation. I would now like to invite Mr. Ashok Minda to give the opening remarks.
Thank you, Akash. Good evening, everyone, and welcome to the Q4 Financial Year 22 earnings conference call of Minda Corporation. I would like to thank you all for joining us on this conference call here today and hope you are staying safe and healthy. In the fourth quarter of financial year 2022, auto industry delivered a mixed performance. Revival in economic activity helped in slight demand pickup for commercial vehicles and passenger vehicle segments, while the two-wheeler industries continued to post bumper numbers. The industry as a whole continued to face challenges of semiconductor shortages and global geopolitical tensions. Even under these circumstances, I am pleased to report that Minda Corporation has continued to deliver strong performance. Our focus is on consistent and sustainable performance. Minda Corporation has achieved highest ever quarterly revenues of INR 9,478 million with EBITDA of 11.4% at rupees 1,078 million. For the financial year 2022, we delivered a consolidated revenue of rupees 29,759 million with 25.7% year-on-year growth. EBITDA for the full year was 9.9% at rupees 2,946 million. Profit after tax for the year was rupees 1,919 million rupees. In line with our current performance, Board of Directors have announced final dividend of 35%, which is 0.070 per equity share. Total dividend for the year is 50%, which is 1 rupees per equity share. Now, I would like to update you on important development of the quarter. The PLI application filed by the company has been approved under the Component Champion Incentive Scheme. We have also successfully completed the transaction of Minda Storage acquisition, and from this quarter, company will operate as wholly owned subsidiary under the name of Minda Instrument Limited. To drive the growth at Minda Corporation, our continued focus is on A, driving technology from in-house initiative and global tie-ups. B, operational excellence through cost leadership. C, growing customer and market segment. And generating higher free cash flow and right capital allocation. Looking ahead, industry growth prospects is expected to improve further with increasing demand for personal mobility and supported by easing supply chain issues. We at Minda Corporation remain confident in delivering accelerating growth by strengthening the core business and capturing the emerging opportunities. With this, I would now like to hand over the call to Mr. Akash Minda to discuss the financial and the operational performance of the company during the quarter and financial year 2022.
Thank you, sir. Good evening, ladies and gentlemen. I now request you to look at the slides which have been uploaded for the quarterly and the annual earnings call. Referring page 3, I would like to state the highlights for Q4 and financial year FY22 performance. Our focus is enhancing the core and deepening capabilities. For the Q4, the revenue growth of the quarter continues to outperform the industry performance. We have improved double-digit EBITDA margins for the third straight quarter on sequential basis. Total lifetime order book booked in the Q4 has been rupees 14,500 million. 8 patents have been filed during the quarter, and we've been granted PLI application. For the full year, some highlights. Our FY22 revenue growth has been 25.8% year-on-year despite challenging macroeconomic scenarios and other shortages. Our EBITDA margins increased by 73 basis points to 9.9% for the year 22. Total lifetime order book in the year was INR 59,300 million. 28 patents have been filed in the year, and 4 partnerships have been endorsed in this financial year for technology advancement. I'd like to now move to the next slide, which is slide 4. This shows the consistent and sustainable market-leading profitable growth, which is the focus of Minda Corporation. If you see on quarter-on-quarter basis, we have delivered the highest ever quarterly operating revenue at INR 9,478 million with a growth of 19.4% on year-on-year basis. On the EBITDA, again the highest ever quarterly absolute EBITDA of rupees 1,077 million and margin improved by 70 basis points on quarter-on-quarter. Also, highest ever PAT margin from 5.9 million. In revenue, we've grown by 19%. EBITDA we've increased by 21%, and PAT has grown by 39% on year-on-year basis. I would now like to move to the next slide, which shows the overall landscape of Minda Corporation. The revenue has been about rupees 29,759 million. Our business vertical and key customers are shown on the left, where green customers mark the EV customers. This quarter, we have added Ultraviolet and Global Tier 1 as one of the customers for us. We have 32 manufacturing locations and R&D capabilities across various divisions. I would like to share that we have over the last 1 year, we have increased our number of shareholders from 49,200 to 83,653, and the shareholding is on the right side. I would now move to the next slide, which is the revenue breakup for the financial year. If you look at by geography, this is on year-on-year. India contributes majority to about 84%. Exports of Europe and North America contribute to about 10%. And Southeast Asia, where our plants contribute about 5.5%. By end market, our two-wheeler is about 48%, passenger vehicle is about 17%, commercial vehicle is about 18%, and aftermarket is about 15%. By business vertical, mechatronics and aftermarket is about 55-56%, and information and connecting system is about 43.3%. I now move to the next slide, which is on the industry performance. If I look at the financial year 22 growth, the industry had a muted growth of about only 1.2%. And if I look at Q4, which is on quarter, then industry degrew by about 16.6%. There were, of course, supply chain issues globally, global macroeconomic issues, subdued sentiments all across India, and infrastructure spending and other replacement demands seem to have also factored in terms of growth. We remain cautiously optimistic about the Indian auto industry due to the low penetration and rising income, but we are also aware of the externalities which will have impact on the automotive demand and supply. I now move to the slide 8, which is on the consolidated performance. Our focus is on continued momentum of growth and outperforming quarter-on-quarter and year-on-year. The company consolidated net revenue for the Q4 stood at 947 crores at EBITDA 11.4% at 107.7 crore. These numbers are including Minda Instruments Limited. I request you to look at the first column on the left. If I compare this from quarter 3 to quarter 4, the growth was about 28.4% in top line, whereas the industry only grew by 2%. Our EBITDA has grown from 78.7 crore to 107 crores, from 10.7% margin to 11.4% margin. Our PBT has increased from 6.7% to 7.6%. If I compare year-on-year growth, 794 crores is now translated into 947 crores, which is a growth of 20%. EBITDA margin has grown from 11.2% to 11.4%. If I look at our numbers without Minda Instruments, then year-on-year, 794 crores has gone to 800 crores, and 89 EBITDA has gone to 88 EBITDA. If I look at for the full year on the right side, including Minda Instruments Limited, we did about 2,975 crores with 9.9% or 10% EBITDA at 294 crores and 6.1% PBT margin and PAT margin of 6.4%. If I compare to the FY21, then we have a growth of about 25.7%, and our EBITDA margin has grown by 73 basis points from 9.2% to 9.9%, from 217 crore EBITDA to 294 crore EBITDA. And that has increased from 93 to 191. There are some exceptional items which I will explain. So in the revenue front, our operations outperform the industries. New businesses and increase in share of businesses in existing customers in all our divisions has supported this growth, along with growth in exports and aftermarket. Our EBITDA margin at 11.4% in quarter 4 delivered double digit despite higher commodity and adverse impacts of supply chain issues, but this was supported by sustained productivity and operational efficiency drives. In quarter 4, PAT includes one-time tax benefits of 22 crores based on past corporate guarantee of Minda KTSN, which has now been delivered. Based on this performance, the Board of Directors have declared final dividend of 35% at INR 70 paisa per equity share, with the payout ratio is 20%. I now take you to the next slide, which is business vertical performance for the quarter 4. If I speak about the business vertical, mechatronics and aftermarket, the year-on-year quarter revenue has grown from 445 crores to 470 crores, and EBITDA margin has gone to 13.4. From quarter 3 to quarter 4, 445 crores revenue is 470, and 13% EBITDA has grown to 13.4. The revenue stability was supported by strong fundamental increase in various customers and segments, and EBITDA grew favorably due to the recovery of raw material indexation from customers and various initiatives taken for the permanent measures for cost savings internally. So look at the information and connection systems, which is primarily wiring harness division. In quarter 3, we did 293 crores with 7.2% EBITDA, and this quarter we have done 338 crores with 7.4% EBITDA. The two-wheeler market degrew, but increase in share of businesses and sustained sales and uptick due to commercial vehicle has given us this growth. Our EBITDA margins stood at 7.4% due to favorable product mix and also tight control on fixed costs and neutralized lag between commodity and other cost initiatives. If I look at full year, our mechatronics division has grown from 1,365 crores to 1,687 crores, increase in EBITDA from 11.8 to 12.3%, and the information system has gone from 1,000 crores to 1,150 crores, increase in EBITDA from 5.6% to 5.9%. I would now move to the next slide, which is slide number 10. I would like to share this slide as the initiatives and the actions that have been taken in the last few quarters and how they have resulted. I would like to share that while the industry has grown from 6% to negative to now 1.2%, Minda Corporation revenue has grown 19% and then much higher than the industry in all these years. If I look at the bottom part of the table, before exiting our loss-making businesses, we can see variable performance. But on the right side, you can see quarter-on-quarter growth and consistent and sustainable performance both in top line and in EBITDA numbers going forward. This is the slide just to share confidence on how Minda Corporation has performed after our transformation in the last 2 years. I'll now move to the next slide, which is the consolidated leverage position. Our net worth has increased from 1,146 crores to 1,330 crores. Our gross debt has reduced from 483 crores to 391 crores. Cash has come down from 499 crores to 336 crores. We can in the last part of the slide, you can see the details. Our net debt is about 55 crores right now, and net debt to net worth is 0.04 multiple. If I speak about our ROCE, on the focus to move towards 20 to 25% and higher, in last year we did about 12% ROCE, and this year annualized, because the quarter one was COVID impacted, we're about 18.4%. Working capital days have come down from 46 to 41 days. Credit rating agencies have reaffirmed our ratings. Now move to the next slide on our performance of the wholly owned subsidiaries and joint ventures. Minda Instruments Limited, which is a 100% wholly owned subsidiary. If you see our year-on-year performance, we did a 389 crores in FY21 as a turnover, which is now 484 crores, a growth. EBITDA of 11.7% in FY21, and this is 11%. And the debt is, the net debt is having fixed deposits, so from 69 crores to 63 crores. If I look at Minda Vast, our sole focus has been on order booking and turning around this organization, where Minda Corporation holds 50%. If you can see on the right side, the FY21 was 143 crores. We have now did a turnover of 218 crores. EBITDA was negative last year, and we have now done a 6.9% EBITDA in spite being a COVID year and all the efforts of turning around. Minda Impact, which is the latest joint venture formed for the antenna solutions with Korea, now has order book of 131 crores lifetime based on all the four-wheeler customers of Maruti Suzuki, Minda and others. Spark Minda Green Mobility is a new initiative, which is a wholly owned subsidiary which we formed last year. This is primarily focusing on design, development and manufacturing of the electric vehicle components and systems. We now move to the next slide, which is on the business performance in the order one. If we see the full year, we have orders booked worth 5,900 crores, out of which 2,400 crores have been replacement and 3,500 crores have been as for the new businesses. If I look at quarter four on the extreme right, about 1,450 crores worth of orders have been booked for this quarter on the lifetime basis. 565 crores are replacement and 885 are the new businesses which will move in the growth. In the center, there are mechatronics division, which is the first vertical. So 2,700 crores, 2,700 lifetime order book has been booked in this year, and out of which 70% is primarily two-wheelers and three-wheelers, and other segments are about 30%. In quarter four, we booked 424 crores. In information and connection systems, in the entire year, we booked 2,550 crores worth of order book, out of which 53% coming from two-wheelers and three-wheelers, and 47% coming from other segments. And about 900 crores of orders have been booked within this quarter. Export orders won in the entire financial year have been for 635 crores on the lifetime basis, and EV order book stands at 952 million or 952 crores for the entire year. We now move to the slide 15, which is sharing on the strategic pillars of the growth for Spark Minda. So as shared in the beginning of the year, our focus is on narrowing focus and deepening capabilities and strengthening the pillars of growth. Focus on enhancing the core, which is on our core product lines. Electric vehicle growth opportunity, which are our product lines which are EV agnostic. Innovation and technology through in-house initiatives and investments as well as global tie-ups in the areas of new product lines as well as existing. And strengthening passenger vehicle offerings in all our product lines that we currently do. Our outcome is to transform and become complete solution provider to the OEMs, achieve cost leadership in operational excellence and thought leadership in technology, premiumization and product innovation of all our products, and drive better than industry growth, which is more profitable. We now move to the next slide, which is enhancing the core. Our focus is on safety and security systems, wiring harness division, die casting division, and instrument clusters and sensors. In the safety and security systems, we are the only company in India with a developed capability for keyless entry solutions, we have filed more than 23 patents and a preferred supplier to most of our OEMs in India and globally, and gaining 100% RFQs which are converted for the keyless entry solutions in the IC and EV platforms. Wiring harness division, we're setting up the state-of-the-art component division for our localization needs and focusing on export and aftermarket. And most important is the raw material indexation and the lag along with the customers has now been with strategic initiatives aligned with the customers as well as with our suppliers. Die casting division continues to be our focus for growth and exports area, we're looking at preferred cost-effective global partners for turbochargers to our customers globally in all the 4 areas of technology which is in the castings, and developing complete in-house process to supply all the die casting parts. In the instrument clusters and sensors, which is now Minda Instruments Limited, now we have full control and access of this business, which gives us opportunity to grow in the global markets as well as develop products and technology coming from our technical partners for all the segments in the industry. Moving to the next slide, which is innovation and technology. Our approach has been setting up our own R&D unit, looking at technology licenses and setting up joint venture with global partners. In the last year, we have developed path-breaking smart key solutions, set up of the new electronic manufacturing excellence division, and also started production of intelligent transportation systems. Important achievements in the last 12 months from the partnership perspective. We have converted one TNA with Right Vision of Israel for two-wheeler ADAS, converted a joint venture with Infact Elects of Korea for antenna solutions, acquired equity stake of 26% in EVQ Point in Bangalore for EV space, and acquired Minda Instruments Limited from the Stonebridge joint venture. Technical collaboration continues. Just to focus on the engineering capabilities that we're developing in-house to our technical center, focusing on vehicle architecture, vehicle connection systems, electronics, and vehicle access and lightweighting. We have more than 200 patents filed. About 2% is on the R&D spending, and we have now about 500 engineers working across our divisions. The focus is on looking at software, electronic hardware, embedded software, upgrading our testing facilities, and mechatronic engineering. We now take to the last few slides, focus on the electric vehicle mobility. So this slide we've shared before, but on the left you can see the two-wheeler with all our product lines. So all our product lines that Minda Corporation does are EV agnostic. So when the EV comes in, they'll be going through more of a premiumization route, which is through electronification and lightweighting and also premium. Clusters are going to go from analog to digital, telematics being inbuilt, castings being lightweighting, various sensors being added, wiring harness going from BS4 to BS6 to EV, various EV product lines like DC-DC converters, battery chargers, and some under development like motor controller and BMS. Our keyless, of course, irrespective of IC, will be going in all vehicles. If you look at on the right side, potential EV kit value from the current business of about 4,000 to 4,500 in a two-wheeler is expected to go to about 16,000 to 20,000 as a potential EV kit. On the next slide, which are just some business wins on the marquee products as well as new products of Minda Corporation. So DC-DC converters, our target customers and customer wins are someone like BMW, TVS, etc. Battery chargers like Hero Electric, Revolt. Keyless entries like Ola, Piaggio, Bajaj, etc. Wiring harnesses like Revolt. Our EV customers in the shown bottom are both two-wheelers, four-wheelers and commercial vehicles, even domestic and export. Our last slide on the value proposition of Minda Corporation. We want to be a high-value, technologically advanced products, global presence with 32 plants, achieve cost leadership in manufacturing and thought leadership position in technology and products, offering advanced technology products and systems, solution in lightweighting, active safety, connected, electronification, and electrification. Technology tie-ups and partnerships with global automotive component companies, well-diversified customer base, product portfolio and business segments, low leverage providing significant flexibility for organic and inorganic growth, 4-tier governance structure to excel corporate governance, and high focus on sustainability and strengthening the framework of ESG. With this, there are some more slides just on the company snapshot. which you can refer at your own convenience. With this, I would like to conclude my presentation and hand over for any questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Ronak Sarda from Systematics. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations on a great set of numbers. Akash, first question, just a couple of financial clarifications. One, on the net cash position or net debt position, this includes the cash balances from MIL, right, for the year ending 22?
Yes. This includes the... hi, Ronak, first of all, sorry. Yes, this includes the cash balance which is in Minda Instruments Limited as well.
Sure. Okay. And the tax write back, is that a cash item or a non-cash item? The 22 crores of one-off which you have highlighted in the quarter.
Yes, it's a cash item.
Okay, thanks. Perfect. So yeah, I mean, I think the overall growth trajectory has come back despite weak industry. And given our new order win, how should we look at next let's say FY23 and FY24? I mean, even assuming industry remains at same level on an overall basis, how should we factor in growth for Minda?
Yeah, thank you, Ronak. Again, our endeavor is always to grow higher 10 to 15% than the industry. While the next financial year looks to be, again, cautiously optimistic year because some segments are expected to do well and some may not. But again, as Minda Corporation, we are wanting to grow higher than the industry and looking at various segments, whether it's two-wheeler, four-wheeler, commercial vehicle, off-road tractors. Monsoon is hopefully going to do good this year, so we may look at that as well. So our expectation is to be 10 to 15% higher. When it comes to the EBITDA numbers, with these current challenges and the global tensions that we are seeing, we would like to first sustain these numbers as committed before. So consistency is most important around the 11%, 12% is what we are forecasting.
Okay, great. And if I mean, look at the overall order win, how do we see now our, I mean, we had a fairly diversified customer base, but this new order wins, of almost, let's say, 3,500 odd crores in the current year, how does our customer, mix look like, or how does our, end segment mix will look like? Will we go back to very fairly diversified, 33-35% each segment kind of a mix now, or how are we looking at the overall mix?
So I'll see, as the current order wins that are there are not significantly going to transform the end customer game. It is going to be primarily two-wheeler segment. It may come down from about 50% to somewhere 46-47 depending on the market. But our focus is to grow other segments. I'll request Mr. Majan to maybe add some comments on that.
Thank you very much, Akash, and hi, Ronak. I think most important in this for us to consider two important aspects. We are trying to balance or review our balance between two-wheel to other segments, which we are looking at significantly. But I can share that apart from the EV segment, our main focus is to strengthen our business order book from our existing customers. because at this given point of time, we clearly see there is opportunity for us to strengthen order book situation with our customers, either through gaining the share of business or introduction of the new products which we have worked hard, our SMIT has worked hard in last 3-4 years' time to strengthen and increase that penetration. So kit value is very, very important for us, which we are trying to strengthen, which is reflecting in 35,300 million new order book, especially in this particular year. I hope this answers.
Got it. That's really helpful. And finally, on the EV order book, right? So we are now, gaining a lot of new component orders here as well, which are thanks to our R&D center. So how should we look at the EV order ramping up, and what was the overall top line in FY22?
So, Ronak, here again, while the order books are there and both for various segments, domestic and export, it depends when these orders are going to start kicking in. Typically, again, the order book is spread between 5 to 6 years when it comes to electric vehicle mobility customers as of now. Again, more important is their uptake. I can give a fair number, but somewhere about 75 to 80 crores should try and come in this year if the two-wheeler market picks up well.
Yeah, I think just to add, we possibly can do much more with the EV segment right now, but the semiconductor situation of the EV segment is affecting them, so not able to produce as much they would like to. So this number can be positive uptick with if in case we are able to get more semiconductors in this regard. So healthy 80 crores upwards at least would be what we would look at.
Right. Perfect. And just what was the FY22 EV contribution in FY22? Absolute number? If you have it.
EV you are asking?
Yeah.
It was about 20 odd crores.
Okay. Perfect. Thank you and all the very best.
Thank you.
Thank you. We have the next question from the line of Bhargav from MK Global. Please go ahead.
Hello, sir. Am I audible?
Yes, Bhargav. Hi.
Yeah. Hi. Thank you for this opportunity. I just wanted to know whether the company is looking at any inorganic growth opportunity, and if yes, then what are the areas that the company would be looking at? Which are the areas? Which are the places? Yeah.
Yes, Bhargav. So again, we have been definitely looking at various opportunities for inorganic. There are 3 avenues. One is, of course, how we can grow our own marquee products and legacy businesses through technology with partnerships or alliances. Second is look at new product lines that we continue to add in our portfolio, but the focus remains on how we can grow our own core areas. And the third is on the M&A front. When it comes to the M&A, we have decided very clear norms internally on what we will look at and where. So we are very clear that we are not going to look at large operations-based companies overseas. We want to stay in our own core areas. We want to stay in our own product lines, and we know this country better with huge opportunities, so we will focus in India. So we keep continue to get opportunities, but they have to tick box all the norms before we finally decide to take a plunge.
Thank you so much, Prakash. That was helpful.
Thank you. We have the next question from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Thanks for the opportunity. Sir, in this quarter, wiring harness business has improved slightly. So what is your margin target for FY23?
So, like we have, shared, our endeavor is to go from current about mid-single-digit numbers to a higher single-digit number in the next few quarters and sustain in those numbers by various initiatives that we are taking. So move towards about a low double-digit number in about 6 to 8 quarters from now. And there are various initiatives that are being taken in that respect. The first and most important is the localization of various imported connectors that we are looking at. and also improving our productivity and manpower related efficiencies because it's a more manpower related product. And third, there are a lot of strategic initiatives being taken with the suppliers or others which will help us reduce our raw material fluctuation and other things.
So, sir, during this quarter, we have seen a significant growth in the MSCV segment. So, most probably that product mix would be very strong in the wiring harness business. Despite that, we have seen only the margin improvement of 20 bps. So, in this situation, what could be assumption for the FY23, sir, for this wiring harness?
Sorry, your voice is not clear. I'm sorry. Can you repeat the question, please?
Sir, in wiring harness business, we have seen just 20 bps margin improvement despite the strong product mix because this quarter's CV numbers was very strong. So, what assumption we can take for the FY23 numbers in terms of the margin improvement?
So, yeah, if I understand the question correctly, the margins for wiring harness division for next year, right?
Yeah, sir.
Yeah, so as I mentioned, so currently about, let's say, 7.5, we would like to increase it, in the next, 4 or 5 quarters. It may not touch double digits, but yeah, significant improvement over the next 4 quarters.
Okay, sir. My next question is related with the die casting business. So, how is the current utilization and what is your capex plan for this particular business?
So, if I speak about our die casting business on the quarter 3 to quarter 4, so quarter 3 we did about 128 crores. In quarter 4, we have done about 154 crores. If I speak about the full year number for the die casting, we did about 425 crores in the last year, and this year we've done 529 crores, which is a 25% jump. Of course, this division focuses a lot on the exports and the four-wheeler market. When it comes to the investment, definitely it's a capex intensive thing, but it has a high EBITDA growth as well as exports. So we are very cautious when we invest because these businesses are backed up by our customer requirements. Typically, our investments in this year for the die casting is close to around about 30 crores for the die casting for the businesses which are going to have SOP in the next few quarters.
And how much current capacity utilization in this business, sir?
So, in the current capacity utilization of, just 1 second, please. So, yeah, the die casting facility with the current capacity utilization would be somewhere about 60 to 70%.
Okay, sir. And so my last question is related with the outlook for the Asian two-wheeler locking system business. How is the progress right now?
For the security division, you mean?
Yeah.
So, you're speaking about the ASEAN or you're speaking about the security systems division?
So security systems division both in India and ASEAN.
Right. So if I speak about the security system division in the quarter, we did about 250 crores in the quarter 3, and we've done about the similar numbers in about quarter 4 this year. If I speak about year-on-year basis, we did about 739 crores in the last year, with a 23% jump in this year to about 908 crores.
So, sir, despite the degrowth in the two-wheelers volume, the growth is 23%. Is it because of increase in the realization only?
No, there are a couple of factors. One is definitely focus on the exports market and the aftermarket increase from this division.
Okay. Thanks. That's all from my side.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Noel Vaz from Asian Market Securities. Please go ahead. Mr. Noel Vaz, can you hear us?
Can you hear me? Hello?
Yes, we can hear you now.
Yes, sorry about that. Yes, thank you for the opportunity. Yes, so I just had one query. So right now with the disruption in coming out of China for most of 1Q, has the company any kind of disruption in terms of spares or certain components which are coming from China? Or also one other thing is that so regarding the increased indigenization or even say the internal sourcing of components, what is the progress has been on that front? That's my only question. Thank you.
Yeah, thank you, Noel. So definitely China imports do continue to be a very big threat and concern going forward, which may hamper the entire industry as well as Minda Corporation's performance in the upcoming quarters. Again, primarily on the electronics and other logistic cost issues and increase in the raw material prices all from China is definitely impacting, and this also impacts Minda Corporation and will be impacting in future if the things continue to work out this way. So we are definitely working on various initiatives, but there are some things which are outside our control, which will definitely impact in the upcoming quarter, in the quarter 1 and quarter 2 next year.
Thank you very much.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Sir, how was the product mix in the wiring harness business in FY22?
How is the what, sorry, for wiring harness?
Product mix in the wiring harness business. It means the two-wheelers, EVs and commercial vehicles.
Mr. Jain, this is the operator. I would request you to go off the speakerphone as we are not able to hear you very clearly.
Hello?
Yes, this is better. Please go ahead.
Yeah, so just I was asking about the product mix in the wiring harness business. I mean to say two-wheelers, PVs and CVs contributions in FY22.
Yeah, so in the wiring harness, about 50% contributes is what by 2 and 3-wheelers. 4-wheelers contribute about 10% and commercial vehicles contribute about 30-35%.
Okay, sir. And how the mix will change in the coming year? I mean to say that in FY23, where we are looking at strong growth in the commercial vehicle segment.
So, of course, if the commercial vehicle segments grow, it is going to give positive impact to Minda Corporation. But again, we have to really wait and watch how each segment really performs in the upcoming quarters.
Okay, sir. And what is the margin difference between the wiring harness business in CVs versus the two-wheelers?
I can just say that in the commercial vehicles, it is higher.
So it would be the higher by the 200-300 basis?
Sorry?
It would be the higher by 200 or 300 basis?
Sorry, that's little confidential and won't be able to share, but yes, it is higher.
Okay, sir. Sir, you have also forayed into the interior plastic business in the domestic market, and you have also given the order books. So, how is the outlook for this business, and what is the break even?
So, this business is again a very small division right now, but the focus is on the 4-wheeler aspects of this business. In this year now again we have a few SOPs coming in from the likes of our 4-wheeler OEMs, largest OEMs as well as the largest SUV manufacturers, even in lightweighting. So this division is definitely, being a small base, is going to grow faster. But definitely it is not a big impact on the Minda Corporation numbers as of now. Currently, it is about a 50 crore business for the last financial year.
Okay, sir. My last question is related with the capex. So, how much capex you have done in FY22, and what is the capex plan for FY23, sir?
So, typically our capex is about 4 to 5% in our compared to the revenue. Now, most of this basically goes into the engineering or technology, as well as our regular capex and maintenances, as well as our brownfield initiatives that we're looking at. If I speak about the last financial year in FY22, we've done about 100 crore of capex.
How much, sir?
100.
Okay, sir. Sir, there's one bookkeeping question. Can you please provide us the Minda Laundry's revenue, EBITDA, and PAT for FY22?
Yes, it is Minda Instruments Limited now.
Yeah.
And just to share with you the numbers for Minda Instruments Limited. So if I speak about Q4 numbers, the sales were 137 crores. EBITDA stood at 18.7 and EBITDA percentage was about 13.5. But we had some extraordinary customer recoveries this quarter. And if I speak about the entire year, for the full year FY22, we are about 485 crores as top line, and EBITDA percentage is about 11%.
Okay, and how much revenue are targeting for the next year, and what would be the growth driver for this business, sir?
So for this business, again, the growth drivers are on the premiumization and the customer segments. If I speak about the products, so the instrument clusters are now moving from analog to digital. So they will definitely be giving premiumization on our product line, adding products in the sensor portfolio, and definitely increasing our penetration into the other segments beyond two-wheeler, and looking at exports also will be the growth driver for this division.
And what would be the content per vehicles in the instrument cluster, sir?
So see, a typical instrument cluster currently is about 600 to 700. Now going in future, depending on the segment, depending on the customization of the product, it may go to about 2,000 upwards. Again, you can keep adding many features, but the important part is that this product will have more of customization, individualization, styling, designing, electronics going forward. So yes, it will help us increase the content per vehicle.
Sir, instrument cluster is one of the important part of the EV's two-wheelers. So the content per vehicle will increase significantly in the EV side? So
again, irrespective of EV, all the product lines of the Minda Corporation, including the clusters, whether it is EV or ICE, will go through a premiumization route. Again, we've started getting orders which will soon come into the market. Whether it's an ICE engine or an EV vehicle, they will have these product lines which are upgraded and improved and premiumized clusters and products.
Okay, sir. Thanks, sir. That's all from my side.
Thank you.
Thank you. We have the next question from the line of Shashank Kanodia from ICICI Securities. Please go ahead.
Yeah, good evening, sir. Congratulations for a stupendous performance. Sir, my question pertains to the end market share that you have shared in terms of the vehicle category regarding two-wheelers, passenger vehicles, and CV. So, if I do a simple arithmetic, your PV segment seems to nearly double from 260 odd crores to 520 this year. So, were there any significant customer wins in that space?
Sorry, which segment are you speaking about? I think there's a line issue at my end.
Passenger vehicle segment, sir.
Passenger vehicle segment. Yes. So, again, the passenger vehicle segments, there are the product lines, for example, as I mentioned, the interior plastics. The die casting exports are primarily for the four-wheeler customers. Also, our partnerships like the INFACT for the antenna, which will come into play, but that's another aspect of it. Also, in terms of the Minda Vast, all the product lines are focusing on the four-wheeler vehicle access system solutions. So these are how we're looking like. And again, wiring harnesses and other such connection systems that we're looking at is also for the passenger vehicles now as well.
Okay, but there were no new customer wins in this space, right? Or were they?
Yes, so the customer base is definitely expanding and growing both domestically and exports. Again, as Mr. Mahajan mentioned earlier, our endeavor and focus is to increase the share of business in the existing platforms and the products that we are into, and then grow with them by delivering them with the new launches and more products. That's the endeavor.
Okay. And so similarly, if I do this mathematics for CV space, so you have largely underperformed the category, right? So last year your CV sales were roughly 500 odd crores, and this year you ended by 550. Just maybe 10% growth, while the market has grown roughly 30%. So any specific reason for it?
So, see, in the CV space, definitely the market is growing now, and all our products are now going to see in the end of the light in terms of the customer wins. So you will start seeing the results very soon with the higher customer sales happening.
Okay. And lastly, sir, what will be the company-wide capacity utilization levels and peak turnovers that you can do of the trend asset pools?
Sorry, you'll have to repeat the question, please.
Yeah. So what is the company-wide capacity utilization levels for us as of last financial year, and what is the peak turnover that we can do out of our current asset pools?
So every plant and every product has a different capacity utilization depending on the customers and the segment each plant is selling. If I have to generally speak about, it's currently about 65 to 70% is the capacity utilization all across. Now it may vary depending on the product or the plant or the segment.
Understood, sir. Thank you so much. Wish you all the best.
Thank you.
Thank you. We have the next question from the line of Mohit Khanna from Banyan Capital. Please go ahead.
Hello, everyone. Good evening and congratulations on a good set of numbers here. First of all, just drawing the attention on the last slide of the presentation where we have the free cash flow numbers, and then when we did the net debt numbers, the position for the company has moved from the net cash position to a net debt position. Just trying what exactly has got into the cash and how did we move from net cash to net debt position. Also because the BSC filing that you guys have done, in that the notes to accounts are actually not really visible. So maybe some error in terms of printing or something. So if you could just clarify on that. Thank you so much.
Yeah. So the cash flow from operations, have been about 208 crores. The change in working capital has been negative 70, and we've done about 108 crores of capex, as I mentioned earlier. In this year, again, we have done investments in the subsidiaries as well as other partnerships of about 170 crores, which is including Minda Instruments Limited takeover. So these are the major reasons where the cash flow has been utilized.
Right. And is there any other plan for the next year on the group level to continue consolidating the other subsidiaries? We are still left with Furukawa and other subsidiaries and joint ventures. Is it an internal plan to continue this on the same path?
So Furukawa is 25%, and that is a joint venture which we don't expect to consolidate because merely of the shareholding. There are other partnerships which we don't intend to consolidate as of now because we want to first grow these businesses along with our partners, and we believe in partnerships. So that is what we would like to do.
Fair enough. Okay, thank you so much.
Thank you.
Thank you. We have the next question from the line of Jay Kale. Please go ahead.
Yeah, thanks for taking my question. Sir, just one question on your wiring harness division. You mentioned at the start in your commentary that, the orders that you've got, some of the OEMs you mentioned. You mentioned wiring harness you won for remote. Just wanted to understand in this BS6 to EV transition, what is the company doing to kind of get more orders on the EV side for wiring harness? Because it looks like that in the new age startups or even the incumbents, you've got orders for many of your other products like smart key solution or DC-DC converters, but somewhere your wiring harness division seems to be lagging to a certain extent. So anything that you can mention that what the company is doing to kind of spruce up this technology or kind of gain more share in this?
Yeah, Jay. So there are two things. Okay, firstly, wiring harnesses for electric vehicle mobility would be classified into two. One is high voltage and low voltage. Okay, low voltage still remains the same, which are currently going in the existing, two-wheelers or any other customers or product lines. If I speak about high voltage wiring harness, which is how the technology shift is going to happen when it comes to the high voltage cables and high voltage connection systems. Again, for Minda Corporation, we are developing and have a team in-house working on the various, EDS of the complete vehicle architecture, and wiring harness is one part of it. And also, definitely, we are targeting other customers to win businesses from them as well to grow this opportunity. So there are various initiatives that are going in-house for the electric vehicle wiring harness across all segments.
Understood. Thanks and all the best. Operator, if there are any further questions.
Mr. Jayakari, do you have any further questions?
No, that's all from me.
As we have no further questions, I would now hand it over to the management for closing comments.
So thank you very much, ladies and gentlemen, and once again for joining the Q4 and annual presentation earnings call of Sparks Minda and Minda Corporation Limited. Again, we continue to focus on our consistent performance and sustainable growth. That's our endeavor. And as Mr. Minda mentioned in the beginning, our focus is on focusing on cost leadership in operation excellence, thought leadership in technology, driving technology from in-house initiatives and global tie-ups, growing customers and market segments, generating higher free cash flow, and very important is right capital allocation. So that is how we would like to proceed further. And again, thank you very much for joining the call. And if you have any questions, you may reach out to Mr. Anshul Saxena, and he can provide you all the details. Thank you.
Thank you. On behalf of Elara Securities Private Limited, that concludes the conference. Thank you for joining us, and you may now disconnect your lines.